When the vendor approached me on this one and said, look, we've got this property that we're looking to sell and hasn't sold and we're interested in looking at it and those sorts of things. And I went and had a bit of a look, took a drive past, and I've got some photos here which I'll show you, and it was interesting trying to work out why no one had snapped it up. So that's what it looks like. That's great, isn't it? You know, had this beautiful tree here in the front and all this lovely little awning, and you can see the front doors tucked in there somewhere through the cobwebs and all that sort of stuff. Fantastic looking property. That's standing in the backyard looking back up. Someone say scary. The next photo is taken standing on that step just before the stairs fell down. No, they didn't really. That's looking back towards the backyard. A lot of potential. When we look at that, we've now got some data. Now we're talking about how to make a decision. We get a lot of data, and we're currently using a data provider called RP Data, which some of you may have heard of. And that's all they do is provide data of sales. I currently have subscription to New South Wales, Queensland and Western Australia to RP Data. So I can look up basically any property, look up the sales history of it, who owns it. In a lot of cases you'll get phone numbers, some you can't, all that sort of thing. However, you can get land size, you can get lot dimension, street frontage, depth. You can put contours on and see does it fall to the street, away from the street, all those sorts of things. You can actually see photos of the properties. It's a stack of information you can get. And a lot of people I know are using Google Earth, for instance. It gives you some of that, doesn't give you all of it. And for what we do, we're a bit more serious about it. We want to get on and we want the best data available so we can make decisions. These are the sales. You can see here Thornley houses. This is done in January 03. We did a 2-year track from January 01 up to January 03. That's all the sales in Thornley. And you can see you get a few standouts that are way up here or up there, which are probably either brand new properties or properties still on very large homes, or some potential to do something with. And then you get a couple down here like this, which are obviously way off the mark, which are probably more your deceased estates, divorce situations, or a bit of human error. For instance, I sold one property which was in the spreadsheet here for $2 million, and I've gone back and had a look at the history of it, and it's come up as the sale price at $20,000. So they obviously forgot a couple of zeros. It's human error. They were just typing it in and forgot a couple of zeros at the end. And so that was that. So this gives you an idea of where the real numbers are on the sale prices in the area. That's a survey looking at the property, and if you can remember, there was a bit of room down this side. We just looked at that and thought, okay, we can get a driveway down here. There's obviously a pretty big yard here. One thing this doesn't give you is an indication of those trees that we looked at, that the photos do. So you need to get a little bit of both. We then did a survey which showed the trees, which you can see all through there. The other thing this property had was this red line through here is a sewer line running through the back of that property. A lot of people walked away from this property for the fact that they saw the sewer in the backyard and said, well, you've got to build over the sewer. Building over a sewer is a cost. We spoke to a builder and said, okay, we've got this situation, what's the cost? He said you'd need to allow about $1,000 a linear metre. It's about 20 metres from there to there. We put $20,000 in our feasibility. When we got into the transaction, we got our architect to design this house, which doesn't actually go over the sewer. So you're then not building over the sewer, so you're then not spending the $20,000. So that's $20,000 back into your profit line rather than as an expense. And as I mentioned, that was what we were doing with the transaction, just literally putting up a boundary fence line up through there and doing the subdivision, and the trees would remain as much as we could in the backyard. Here, which is what I was talking about, we run feasibilities, you'll get one very, very similar to this. We've actually changed it since we did this one and updated it, and you'll get one emailed to you. We actually had a projection of building 2 homes. They would be the sale prices, and you go through here and literally anything in green is the things that you actually input the data. So you can see you put agents commission, we're putting construction costs. You can see that sewer encasement I was talking about. That's a $20,000 cost. We actually leave a contingency of 5%. So in this case it was about just over $20,000. Even though we had this property under option and we never planned on purchasing it, we still left the stamp duty on the purchase price. Now this feasibility automatically calculates the stamp duty for you, and this one was based on New South Wales stamp duty rates. However, it's calculated automatically. And you can see here we've got a margin. It tells you there's a 20% profit margin, and then it tells you the dollar amount as well, so the calculated gross profit, which in this case was 226 as a starting point. What we then decided to do was say, okay, well, rather than building, let's look at selling land, because we got the subdivision done. Instead of going through this process of building and carrying on and then what goes on and wet weather and Christmas and everything else that happens, what could we sell the land for? So we've now taken the construction cost out. We've changed our sale prices and taken the construction cost out. That then shows $271,000 profit. So on this feasibility, we actually had more profit in selling land than what we did on building the two homes. So guess what we did? We sold the land. And what ended up happening is we didn't quite achieve those prices. We ended up making $240,000 profit without any building work. One thing we did do, and if you remember, you saw the house that I showed you in those photos. One way we thought we could add some value to that land was get rid of the house. So I've got to say, I think that looks better than the first photos I showed you. Because at this point, a lot of people say to me, well, hang on, like, you know, if you've got to get a driveway and let's say there's a garage in the way or someone's lounge room's in the way, and who's going to give you the right to take out their garage? Well, in this case, we actually still don't own this property and the house is gone. That's all a negotiation. At no point did we ever own this property. This now shows you the process of what's gone on there. As I mentioned, in October 02 we saw the transaction. November 02, bit of discussion with council on what we could achieve. Did our feasibility in December. We signed the option agreement in March 03. We lodged our DA for subdivision in May. Council asked us for some extra information in July, and we got an approval in September. Now, do you remember when I showed you that first photo and it had that tree in front of the house? In this particular council, in Hornsby Council, if a tree's within 3 metres of a house, you can remove the tree. We took the tree out, then we took the tree out in September, and then the next day we lodged a DA to demolish the house. Because had we got rid of the house first, the tree would have had to stay. Now that tree was a bit of a scraggly one, and we normally tend to plant a lot more plants on site than one we take out anyway. That one needed to go to add some value to the site. So we took the tree out, and this is about understanding the process. So we got the approval, took the tree out without needing any approvals, then we lodged the DA to demolish the house in September, our approvals in October, took the house out in November, and then we started marketing. Now this transaction should have finished, if we'd continued on this way, in March 04. We needed a stormwater easement through a neighbouring property to get this subdivision done. The neighbour didn't want to give us the easement. The neighbour held us up for about 9 months on this transaction. So I just want to make all these distinctions, you know, so you get this, that in a lot of these cases we tend to overestimate our costs. The other thing you probably need to do as well is overestimate your time. Be conservative with your feasibilities, because these things do take time.